Hold on to your hats. Did you see the market carnage on Friday? Trillions of dollars vanished in a single day as trade war fears resurfaced. But could a few words from a social media post be enough to calm the storm? That's exactly what happened Sunday night, as stock futures staged a dramatic rebound after President Trump's reassuring message about U.S.-China relations. Let's break down what's happening. After a brutal Friday sell-off fueled by renewed trade war anxieties, U.S. stock futures opened significantly higher on Sunday evening. Dow Jones Industrial Average futures jumped a substantial 373 points, representing a 0.8% increase. The S&P 500 futures climbed by 1%, and the tech-heavy Nasdaq 100 futures saw an even more impressive surge of 1.3%. What fueled this sudden shift in market sentiment? The answer appears to lie in a message posted by President Trump on his Truth Social platform. Specifically, his Sunday post walked back, or at least softened the tone of, a prior threat from Friday to impose massive increase of tariffs on Chinese goods. It was that threat that sent shockwaves through the market, triggering a massive sell-off. To give you an idea of the scale, that single-day rout erased a staggering $2 trillion in market value. Think about that for a moment. That's more than the entire GDP of some countries, gone in a flash. Trump's Sunday message attempted to soothe frayed nerves. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I, Trump wrote. The USA wants to help China, not hurt it. Vice President J.D. Vance echoed these sentiments over the weekend, stating in a Fox News interview that the U.S. is open to negotiation with Beijing if Beijing is willing to be reasonable. He also added a caveat, noting that the U.S. holds far more cards in the relationship. These comments are being interpreted as a potential de-escalation, encouraging investors to wade back into the market after Friday's panic. But here's where it gets controversial. Is this a genuine shift in policy or simply a temporary attempt to calm volatile markets? Some analysts argue that Trump's statements are merely tactical, designed to prevent further market instability ahead of crucial economic data releases. Others believe it signals a genuine desire to avoid a full-blown trade war, which could have devastating consequences for both economies. Putting Friday's drama in context, all three major averages ended the previous week in the red. The Dow Jones Industrial Average declined by 2.7%, the S&P 500 fell by 2.4%, and the Nasdaq Composite slid by 2.5%. The S&P 500's 2.7% drop on Friday alone marked its worst single-day performance since April, when the market was still grappling with the initial shock of Trump's earlier tariff announcements. And this is the part most people miss. While trade tensions grabbed headlines, other significant headwinds are gathering. The government shutdown continues, and a critical payrolls deadline looms. October 15th is the next pay date for many federal employees, and it could be the first paycheck they miss. This could have a ripple effect throughout the economy, impacting consumer spending and overall growth. Furthermore, earnings season is about to kick off, starting with the financial sector this week. Heavyweights like Citigroup, Goldman Sachs Group, Wells Fargo, J.P. Morgan Chase, Bank of America, and Morgan Stanley are all scheduled to release their results on Tuesday and Wednesday. A wave of regional banks are also set to report their quarterly performance. These earnings reports will provide crucial insights into the health of the financial system and the broader economy. So, what's the takeaway? The market is currently walking a tightrope, balancing on President Trump's words. While the futures market is reacting positively to the apparent easing of trade tensions, significant challenges remain. The government shutdown, the looming payrolls deadline, and the upcoming earnings season all contribute to an uncertain outlook. Will this rebound hold, or is it just a temporary reprieve before the next wave of volatility? What do you think? Are you buying the dip, or are you staying on the sidelines? Share your thoughts in the comments below.